In this video, we're going to look at the Purchase Daybook and the Purchase Returns Daybook. So we'll explain what we mean by these two terms. We'll look at how they can be laid out and presented, and we'll also demonstrate how we record purchases information in them. Before we look at the books themselves, though, I want to make the distinction between something called a cash purchase and a credit purchase. Now, a cash purchase, when accountants and bookkeepers use this term, we're not actually referring to a purchase that's paid for by paper notes or coins. Instead, what we mean by this term is that the purchase is paid for at the same time as the invoice is received. So the payment method is irrelevant. What we're saying is that no period of credit was taken. So a cash purchase would also include situations where a purchase is made using a check or a credit card or a debit card to pay. Where we have a credit purchase or a purchase on credit, here what we're talking about is a situation where payment is made sometime after the invoice is received. So a period of credit has been received from the supplier. Sometimes this will be referred to as credit being taken. An example, we might have 30 days credit or 90 days credit or a different period of credit. Okay, so let's start looking first at our Purchase Daybook. Now this can often be abbreviated to PDB, and in our Purchase Daybook we're going to record details of any purchases that are made by the business on credit terms. Now, different businesses may record slightly different things from the invoices that it receives from suppliers, but in general, there are certain things that we will always see being recorded. So, for instance, the date of the invoice, we'll have a supplier name, and that supplier will almost always have a supplier reference number. We'll record the invoice number as well as the gross, VAT and net amounts from the invoice itself. Now, earlier I said that we'd record a supplier reference number because every supplier that we deal with on credit terms is going to be assigned a unique supplier reference number. Now, typically these are alphanumeric in nature, and what we mean by that is that they're going to be a mixture of letters as well as numbers. Now, they're used so that we can help the business identify the correct supplier and make sure that all transactions relating to that supplier are recorded correctly, that we don't record them against the wrong supplier account code. And this is certainly more important when we have an awful lot of suppliers that we deal with on credit terms. So let's have a look at an example of a Purchase Daybook. So here I've got a table where we've recorded invoice date, supplier reference, supplier name, the invoice number, and columns for the net amount, the VAT amount, and the gross amount taken from our individual invoices. Now the columns can of course be placed in a different order, and sometimes, it's fairly common that different businesses may use slightly different ordered columns. But then what we do is when we receive an invoice from a supplier, we will record that information from the invoice into the Purchase Daybook. Then at the end of a period, and this period could be the end of a day, the end of a week, the end of a month or the end of a quarter, or whatever is convenient for the business and makes sense for the business, we will total up the columns. So on the screen at the moment, we've got the total for all of the March 2016 purchase invoices received. Please note that the total of our net and VAT columns, if we add those two together, should equal the total of our gross column. This is known as a cross-add check, and it helps us make sure that we don't make any mistakes when either recording different the amounts from different invoices, or when we're adding up columns for different periods. Now, earlier on, I said that we could have alternative layouts, that the columns could be in a different order, and here we've got an example of that. So all of the columns are in this contain the same information as before, but we've changed the order of the gross, VAT and net columns. This time we've got the gross on the left hand side and the net on the right hand side of the table, whereas previously those columns were reversed in order. A further alternative layout would be as shown on the screen at the moment. What we've done here is we've recorded different types of purchases. So if it's the case that the only suppliers that you deal with are in respect of suppliers of one particular type of goods or service, then we can just have one column. But if we have different types of suppliers, some supplying one type of service, another supplier supplying us with goods and so on, we can have different columns for the different types of goods or services being received and purchased. So here in the example on the screen, we've got some suppliers who are providing us with goods, and we'll record those in the purchases column, and we've also got a supplier dealing with us on credit terms in respect of advertising costs. So we've recorded that as a separate column. Just remember, the total of both of our net costs in this instance plus the VAT should cross out and check to the total of our gross amount. So that was our purchases daybook. Let's now turn our attention to the purchase returns daybook. Well, our purchase returns daybook records details taken from the credit notes received from suppliers. Now, a credit note is where a supplier issues a credit note where a previous invoice was incorrect and charged too much money. And this might be because goods received were returned, or perhaps it was the case that the supplier failed to apply a trade discount or a bulk discount properly and had invoiced too much. Now, the information that we record in our purchase returns daybook is going to be almost identical to the information that we record in our business's purchase daybook, and the layout will be virtually identical as well. There'll be a minor difference, but not much. So let's have a look at a typical layout. Well, here we've got the date of the credit note. We've got the supplier reference and the supplier name, as well as the credit note reference. And then we've got columns where we'll record the gross amount taken from the credit note, the VAT from our credit note, as well as the net amounts from our credit notes. And here we can have more than one column if we've got different types of goods or services being received, and where we receive different credit notes as well for. As was the case with our purchase day book, the total of the net costs and the VAT columns should cross-add and equal to the total of the gross column. And this enables us to do a quick check to make sure that we haven't made any mistakes in recording the amounts.